Good afternoon to everybody who's joined. Hope you're all keeping well. For those of you who had some snow yesterday and today, hope you enjoyed it and got some joy out of it. Welcome to the Tax Talk. I'm joined today by Liana and Andre. I'm going to hand over to Liana to do the intros about them or of them. But they're going to take you through tax today, why we pay tax, the types of tax we pay, how to complete a tax return, when you need a tax expert, and so on and so forth. Liana and Andrea, we're so grateful to have you with us today. And I know the information that you're going to share is invaluable to everybody who is submitting or has already submitted their returns. We're looking so forward to it. So thank you so much.
Daniela, thank you so much for that introduction and a warm welcome and good afternoon to all of our attendees. My name is Liana Henning. I'm part of the financial wellness team. I've been in the wellness industry for the last 18 years, and prior to that, I worked for one of the banks. I can definitely say that financial wellness is my passion, and I'm very, very honored to be on the call this afternoon with Andre Pinar. I'm going to allow Andre just to introduce himself, but Andre is, of course, a tax specialist, and I'm going to pose all the difficult questions to Andre. Good afternoon, Andre, and thank you for being on the call with me.
Hi, Liana, and hello, everybody else on this call. Yeah, my name's Andre. I run an accounting practice specializing in income tax from the lovely Cape. So we didn't have the snow that you guys had, but we definitely have the cold here. Tax and figures is what I do for a living. Graduated as a BCom student in 1993. Did my articles and was involved in the financial field at various corporate industries. And from there onwards, started my own accounting practice and been doing income tax from then onwards.
Awesome. Thank you, Andre. So we definitely know we're going to get the right answers that we are looking for this afternoon. So, of course, we do want to encourage everybody to participate. You are welcome to post your questions in the meeting chat. The format of today's session is really just positioning the financial wellness program or element of the Ask Nelson program. But then we're really going to delve into elements like why do we have to pay tax? When do we submit our tax return? We'll be touching on some of those frequently asked questions, and this is where I want to encourage you. If we're not touching on the question that you would like answered, please pop it in the meeting chat. I'll definitely keep an eye on it. We've only got an hour this afternoon, and I know that we usually get so many questions. So if we by any means do not get to respond to your question, please feel free to reach out to the Ask Nelson program so that we can then communicate with you further. Now, I am making use of Mentee polling, just one or two questions to get your engagement. But before we start with that, I would like to share a quick video clip with you around remarkable money moments. Let's watch.
Remarkable money moments are those times when we not only try, but we triumph in our money matters. It can be really inspiring to hear about other people's remarkable money moments, because in those moments you may realize that you can do it too. To help you see how you can triumph in your money matters, we share Lorato's story of how saving even a little since she was young ensured that she could take up an opportunity to study abroad. Or John's story of how his family learned during the worst days of COVID that they can live within their means and adjust their lifestyles to fit their budgets, making small changes that made a big difference. As will Tinder's discovery that with an emergency fund, he had real peace of mind even in the toughest financial times. Or finally, how Maria was able to get out of the debt trap, one debt at a time, with just 200 Rand. Realizing that you can is very important, because as the famous quote reminds us, whether you think you can or you think you can't, you're usually right. Which of these remarkable moments inspire you the most? Is it realizing that you can learn how to save, or making changes to them within your budget, or finding peace of mind knowing you've got an emergency fund, or getting out of the debt trap? Remember, Your financial coach can assist you achieve a remarkable money moment of your own. We are just a tip or a call away. So join our May Money Challenge and share your.
And I'm actually going to stop it right there. So, of course, we are now in July where you can share your money moment with us. But really, just as a reminder, and as we are addressing tax matters today, you really need to understand your holistic financial wellness. And of course, this is what the program offers you. You've got access to a financial coach telephonically, and we're here to support you no matter where you are in terms of your financial journey. Now, I always say financial coaches, unfortunately, do not have magic wands, so they're not going to resolve your financial matters in one consultation or one discussion, but we are here dedicated to support you no matter where you are in terms of your financial journey. Whether you're single and starting out and thinking about those money conversations, maybe you're thinking about commitment and how that could have an impact on your financial situation. Maybe you're growing your family and you're wondering how to budget for this new addition to the family. Some of you might feel like you're the bank of mom and dad, where you've got young adult children. I certainly feel like they've forgotten to call me mom and it says ATM because they're constantly asking for something. Or some of you might relate to the sandwich generation or black tax, as so many people refer to it, where you're earning the income. Not only are you supporting your own needs, but you are also supporting multiple generations. And the squeeze in the middle is becoming increasingly tight. Some of you might be counting down the paychecks until you reach retirement. And you need to ask yourself the question, is it going to be the time of your life? Or is it going to be a race between death and bankruptcy? So please remember, you've got support, whether you are looking at your planning and payments, your budgeting, whether you are aspirational and you're needing a little bit of guidance around setting those financial goals, and of course, maybe you need some guidance in terms of your tax matters. We are here to support you. Now, to set the scene, we know that times are quite challenging at the moment in South Africa. We are all consumers on this call, and we are affected by inflation, the rise of interest rates, fuel costs, groceries, electricity, the list goes on. I think we can also agree that life is quite hectic. If you think back to this morning, maybe you already juggled the role of being a mom, a partner, a spouse, a sister, a friend, a colleague, a manager, but where during all of this busyness do you find time to manage your finances effectively? And yes, we are now officially in tax filing season. So the question would be, are you ready for tax filing season? Of course, from the 7th of July, you could start submitting, but I'm not going to go into too much detail on that. This is, of course, where Andre is going to provide valuable information. So, Andre, I think so many people often ask the question, who should be paying tax? So can you maybe just shed some light on this for us?
Yeah, certainly. Everybody in South Africa needs to pay income tax once you start to earn in excess of 95,750 Rand per year. Now that roughly equates to, I think it's about 8,000 Rand per month. So if you start to earn above that amount, then you are liable for paying income tax. So at the same time, anybody that earns way in excess of that amount would also get the same benefit as people not earning that much in the tax break that you get. But that'll be covered in a specific slide when we talk about rebates.
Thank you, Andre. So that puts it in position. And I would like to hear from our audience this afternoon on Mentee polling. Why do we have to pay tax? So if you look at the meeting chat, I'm going to post a Mentee polling link. Now, Mentee polling, of course, is completely confidential. And it is just a fun way for me to engage with my audience. So have a look at the meeting chat. I've just posted that link. If you have your cell phone handy, you can, of course, also simply scan the QR code, which is displayed on the screen right now. So why do we pay tax? Let me know. And of course, Andre, while we're waiting for some of these responses to come through, maybe you can also share with us, where exactly does our tax money go?
Yeah, the tax money is used by government to fund all the shared resources that everybody is using. And that are things like the roads, your hospitals, security services, servicing debt for infrastructure developments, social development as well, paying your SASSA grants to people that doesn't earn an income or that are retired. So it's really just taxes that are collected throughout the country from everybody that is earning a living so that shared services can be funded. Now, we all know that the government, unfortunately, aren't spending that money that well, but that is really the purpose, is for paying for all these services that we are supposed to get from a central government.
Absolutely. And we can see some of the responses coming in from our audience members, for government to steal. I'm sorry, that was the first one that caught my eye. Not sure really government taking the center stage there. Service delivery, yes, absolutely, as you just explained. So Andre, yes, you touched on these important points, our schools, our safety, our roads, etc. But yes, it is a bit difficult to swallow when we look at our salary slips and we see that deduction and then you hit a pothole, or there's no electricity, or our public hospitals are shocking. So yes, it is quite challenging to see that money go off your payslip. But there are different types of tax. But which are the ones that's most common, if I could use that word, to most of our consumers or most of our attendees on the call today?
Yeah, I think if you are a working South African citizen and you earn in excess of that threshold of about 8,000 Rand per month, then pay as you earn, or PAYE as it is commonly known, is a tax that all of you would be familiar with, because that is something that are being deducted from your salary slip every month. There are other forms of taxes as well, and the other one that really everybody needs to pay is value-added tax. That is 15% tax that is added to most goods and services in the country that you pay from your grocer, or any type of clothing that you buy, or any type of goods and some services carries that 15% VAT on top of the normal selling price. Now, that is what we refer to as the most fair type of tax, because everybody is paying that, and you pay that at a fixed percentage of 15%, regardless of the income that you earn. Other forms of taxes are income tax that is payable by companies. So the company that you work for and all other institutions needs to pay income tax, much like you as an individual need to pay taxes on your salary. And then there's also something called capital gains tax that you might come across when you sell property, or any investments that you make a profit on between when you bought it and when you sell it. So those type of taxes are the ones that most of us as consumers would come across in your lifetime.
Thanks, Andre, for putting that in perspective. So now, yes, I did mention we are currently in tax filing season, but can you maybe just explain, because very often we might get a little bit confused as to when exactly is it tax time? Is it from January to December? How does the tax period actually run?
There's a couple of dates that one's got to remember. And I think the most important one is that the income that you earn during a period that starts in March and ends in February of the following year is what is calculated in terms of the taxes that you are paying. So it's not a normal calendar year. SARS have got a different year, which starts in March and ends in February. So the tax season that we went into now, that we started to file from Saturday, is covering that period of income that you've earned. So a couple of months after the tax year ends, the filing season for that period opens up. So the filing season that started in July will run until about the 24th of October, and that is for the period that ended in March. And that is what we refer to as the 2023 filing season. So the year in which your financial year or your tax year ends is how we refer to that. So although only January and February fell within that current filing season, because it ended in February 2023, we refer to it as the 2023 filing season. Then if you do not file your return during that period, it doesn't mean that you don't have to file a return anymore. It just means that SARS will penalize you for the late filing or non-filing of your returns. So please make sure that you do submit your returns during this filing season that ends in October. If, however, you are a provisional taxpayer, meaning that you've got any other form of income that you also need to declare to SARS other than your salaried income, you've got until the end of January of the following year to file your return. And SARS is allowing that extra bit of time just to make sure that you have all the figures calculated correctly before you need to file your return.
So, Andre, if we talk about provisional tax, as we're all working and we're earning a salary, how and when will this then actually be effective?
Provisional tax is not a different form of tax. It is just a different form of collecting the income tax that you need to pay to SARS based on the total income that you've received. If you are a salaried earner, employers need to deduct PAYE or pay as you earn from your tax slip from your income that you receive every month, and they pay that across to SARS on your behalf. But if you earn any other form of income on which you also need to pay income tax, then it becomes your responsibility to declare that to SARS and pay that taxes over to SARS by way of submitting a provisional tax return to them twice a year. Now, that return is due in August and in February of every year. So it's halfway through the tax year, and then once again at the end of the tax year. The first time that you calculate your provisional taxes, you would do that in August by looking at what you've earned so far throughout the year. Use that as a basis to predict what you're going to earn for the balance of the year. Then work out how much taxes you need to pay on that and pay half the taxes in August. Come February, you do the exact same calculation, but by then you should already have actual figures for March until January. So it's only one more month that you need to predict. You then work out how much taxes is due, deduct what you've paid in August, and pay the balance in February. And then when the filing season opens up, you can then square it off to the exact number of or exact value of income that you've earned on which you haven't paid your taxes. And that is then the final time when all your income is added together and you then pay the taxes that wasn't paid or claim a refund on what you might have paid in excess of what was due.
So, Andre, let's pretend I love baking and I've got a little side hustle where I'm selling my baked goods. That income I would then need to declare, and that would be provisional tax, right?
Correct, yes. It could be that. And what's also most common for many taxpayers is when they have a rental property that they rent out to somebody and they earn an income on that. If you make a profit on that, so in other words, if the rental income you receive exceeds the expenses on the property, then that profit needs to be taxed as well. And you add that to the rest of your taxable income to determine what the tax scale or the tax rate is that you would be paying taxes on. And then, much like you said, Liana, if you bake cookies or anything like that, then that is the additional income on which you need to declare to SARS on your provisional tax return.
Thanks so much for clarifying that, Andre. So then my next question would really be, who needs to register as a taxpayer? And I know in a conversation last week, I was so surprised when you mentioned even if a young child, I think you used the example of doing modeling work, and if they're getting paid for that, they have to register. So can you maybe just clarify for us who needs to register as a taxpayer in South Africa?
Yeah, Liana, you're correct. It doesn't matter what age you are. It depends on how much income you earn, or in fact, if you are starting to earn an income. So even if your income is below the tax threshold of about 95,000 Rand per year, you still need to register as a taxpayer. So the moment you start to earn income that is taxable, you need to do that registration, regardless of how much that income is. So not to be confused with the threshold. That threshold is only for when you start to pay income tax. But you need to register and get your registration number from SARS the moment you start to earn income that might be taxable.
And then I guess the next question would be, how do I register?
SARS had made it very easy now with the online services, SARS e-filing. So you would log into SARS e-filing and register as a e-filing user. And if you do not have a tax number, it'll prompt you to register for income tax as well. You would enter all your particulars, your ID number, your address, your bank account details, your normal FICA type of documentation. And once that goes through to SARS, they will issue you with a tax number. So it is really that simple. Your employer might, however, also register you once you start to work for them and you are not registered yet. So chances are that you are already registered, you might just not know that. And by just maybe phoning SARS or speaking to your employer, you might be able to get that income tax number. But if you know that you are not registered yet, just log into SARS e-filing and follow the prompts. It's a very, very easy and painless exercise these days.
So then I'm really wondering, if tax is being deducted from my salary, do I really need to submit a tax return?
No, not in all instances. SARS, once again, is trying to make it very easy for taxpayers to comply. And what they are saying is, if you have only worked for one single employer and you've worked for the entire year and you've earned less than 500,000 Rand for the year, you do not need to submit a return to SARS. So what they're basically saying is, if you've only earned a normal fixed salary below 500,000 Rand, chances are that your employer would have taxed it correctly. And therefore, you don't need to submit a return to SARS to just prove what they've already known. But the opposite obviously applies. if you earn in excess of 500,000 Rand during a tax year, you need to submit a return to SARS. It doesn't matter if you've only worked for one employer or if you don't have any other things to declare to SARS. If you've earned in excess of 500,000 Rand, you need to submit a return. And obviously, if you haven't been employed for a full year, you also need to submit a return to SARS. But that's a bit of good news because chances are that you would get money back from SARS. And the reason for that is that when the tax scale at which you are paying your income tax, that percentage of taxes that is being deducted from your salary, when that is determined, one looks at your total expected annual earnings. And when that earnings doesn't materialize because you haven't worked for a full year, it means that that percentage that was applied to your income might be higher than what would have been applied if you've only worked for a portion of the year. So therefore, when you submit that return, chances are you will get a refund. Also, if you contribute towards a medical aid or a retirement annuity, or if you've earned a travel allowance on which a portion is taxed and a portion is not taxed, then you need to submit your return to SARS as well. And that doesn't matter then how much you earn. Even if you earn less than 500,000 Rand a year, if you've got a medical aid and a retirement annuity, you need to submit that return to SARS.
Thanks, Andre. So that puts it in perspective. Yes, who needs to submit? But then I think you've touched on some of the reasons why you want to submit, but what would be some of the benefits? I know that you could be getting that refund, but what else? Why is it important to submit this return?
Often when you apply for a bond or for a loan from the banks, but in most cases for a bond on your home loan from the banks, they want you to prove the income that you've earned. And because it is so easy these days to tell them that you're earning a lot more than what you actually do, because everybody can fake a payslip these days, they want proof from SARS. So they want your tax assessment as proof of the income that you are earning, because they are saying that nobody would claim more to or declare more to SARS than what you are in fact earning, because that means you would be paying income tax that you shouldn't be paying to SARS. So it's quite important that you have those assessments up to date so that you can prove to the bank when you apply for a home loan what your income is. We also find from time to time that SARS are changing their minds. So you might be submitting this year's return, and then you would find out from SARS that they want last year's as well, although you didn't have to submit a return to them in the previous year. So rather keep those returns up to date so that you don't have to go and scratch for paperwork when 10 years down the line, SARS now says that they want a return from you. Also, when you retire or when you resign from your employer and you are due a lump sum, maybe because of retirement withdrawal or retrenchment or anything to that effect, SARS will not issue a tax directive to your employer or to the retirement funding institution to tell them how much are to be taxed when your returns are not up to date. Therefore, that money would not be paid out to you. So it's very important that you keep the returns up to date so that you don't find out when you need the money most that SARS is withholding that because your returns are not kept up to date. And then we've also found that if you keep on submitting those returns diligently, chances of being audited becomes less every year. So just to have peace of mind and not to struggle through an audit, we recommend that you just keep those returns up to date, even if you don't have to submit a return, to prevent an audit in future.
Andres, I'm already keeping an eye on the meeting chat, and there's questions coming around that auto assessment. But before we go into the auto assessment, what would be some of your top tips for deductions? Maybe as a property owner, what can you share around that?
Yeah, if you have an investment property, you would earn a rental income every month on that property. Now, as I said before, you need to declare on your provisional tax return the income that you've earned from rental properties, but it doesn't mean you need to pay income tax on the full income. Some of the expenses that you incur on the upkeep of that property is deductible from that income. So if you have a bond on the property, the interest on that bond you can deduct from the rental income. And if you had to repair the property, maybe a window got broken or you need to replace a stove or an aircon or something to that effect, you can deduct that as well from the rental income. Rates and taxes, if you don't recover that from your tenant, you can also deduct that. So any type of income really that you incurred in the upkeep and the maintenance of the property can be deducted. The same applies if you are baking cookies from home, the electricity that you spend, the ingredients that goes into those cookies, the packaging material, maybe somebody that you pay a commission to sell it for you. So any expense really in generating the income can become tax deductible against that income.
Thanks, Andre. So then I've also heard of a tax rebate. So can you maybe just clarify what is a tax rebate and how is it calculated?
There are different forms of tax rebates, but the most important one is the tax rebate that takes care of everybody being treated fairly in terms of that first 95,000 Rand that isn't taxable. When we started the discussion, I said that if you earn less than 95,000 Rand per year, you do not need to pay income tax. But what SARS is doing is they're giving that benefit to everybody. So the first rebate that one would be getting is called a primary rebate, which is calculated at 18% of the 95,000 Rand on which everybody is not paying income tax on. So although you're earning in excess of 95,000 Rand, that first 95,000 Rand would not be taxed at a rate of 18%. So you would not get that as a refund, but when your employer is calculating how much taxes is due to SARS, they would deduct that first primary rebate of 17,000 Rand from your tax payable, and only what is left is then divided by 12 months and paid across to SARS on your monthly salary. So that is what we refer to as a primary rebate. Depending on your age, you would also qualify for the secondary and tertiary rebate, and those are the main rebates that one would get. If you have money in the bank and you earn interest on that, there's a further rebate on that interest earnings. And what it means is that the first 23,800 Rands worth of income that you earn on your interest is exempt from income tax. And that is what we refer to as the rebate on interest earnings. So a rebate, in essence, is a deduction or a reduction on the income tax that would be payable to SARS on different forms of income. A further rebate that would apply is one on capital gains tax. If you sell shares or if you sell your investment property or maybe even your primary residence, that would be subject to capital gains tax. But the first 40,000 Rand is exempt from income tax. So that is also referred to as a further rebate on capital gains.
Andres, I guess the question on everybody's mind is who qualifies for the rooftop solar tax incentive, and is it worthwhile? Do you get it once off? Is it something that you can claim for every year? Can you maybe just share some insight on this?
With the recent budget speech, the government announced that there would be a solar rebate for residential or for individuals if they put on a solar type of system in your house. Problem with that is it is really maxed out at a 15,000 Rand credit that you would get. And you would only get that if you spend up to 60,000 Rand on the solar component of your installation. So if you only put in a battery and an inverter system, you would not qualify. It needs to include solar panels as well. And it is only the cost of the solar panels that is taken into account in the rebate that you would receive. And how it would work is that 25%, a maximum of 25% of the cost of the solar panels would qualify for the rebate. Now, 25% times 60,000 Rand gives you 15,000 Rand. So that would be the maximum you would get back from SARS if you spend up to 60,000 Rand on the solar portion of your total installation. That installation also needs to take place between the 1st of March of this year and 28th of February next year. And you need to have a certificate of compliance also from the electrician that has fitted that onto your house. And it is only a once-off rebate. It is not something that would be repeated every year, but it might be that the government is extending it beyond the 28th of February. So it might be that if you install the equipment after the 28th of February next year, you might also qualify. But at this stage, it is only for installations up to the 28th of February 2024.
I understand. Thanks, Andre. So, looking at just some of the deductions and how we could potentially use this to our benefit, and I think this is going to link into some of the questions that I'm seeing in the meeting chat. We talk about retirement funding contributions, medical aid contributions, travel, and donations. So can you maybe just briefly explain that? And then I'm going to link one or two questions into this particular content.
Sure. As a salaried taxpayer, there's really very little you can do to save on the income tax that you pay to SARS. But the one thing that makes a big difference is a contribution that you are allowed to make towards your retirement fund. Now, it might well be that you do have a retirement fund with your current employer, but that is normally limited at a maximum of about 15% of your salary. if you look at the employer's contribution as well as your contributions. But what SARS is saying is you can up that to 27.5% of your total income, or a maximum of 350,000 Rand per year. That contribution will then be deducted from your taxable income, and only the portion that remains would then be subject to income tax. So if you were to earn 10,000 Rand a month and you contribute 2,000 Rand of that towards a retirement fund, you would only be taxed on 8,000 Rand per month and not on the full 10,000 Rand that you would be earning from your employer, because the 2,000 Rand goes to a retirement fund. So it's really a very, very nice saving, and I think a way in which you would get an immediate return on such an investment, because the income tax saving that you would have on that portion of your salary is effectively the return that you would already be getting on such an investment. So we really recommend to all taxpayers to make use of this benefit. If you contribute in excess of the 27% or the 350,000 Rand a year, you don't lose out on that benefit, but you don't get the benefit in that same tax year. It is capped at those values. And whatever you contribute in excess of that gets carried forward to the following tax year. Somewhere else then where you would get a benefit is if you have your own medical aid and you are not dependent on the government's medical systems or the government hospitals in taking care of your medical needs. And how that works is that the first two dependents on a medical aid is getting a tax credit of 364 Rand per month. And if you are a family of more than just two dependents, you might have two children as well, there's an additional rebate of 246 Rand for any additional members of that medical aid. Now, if you were to add all of that up, a family of four would basically then be getting a tax credit or paying less tax in excess of 1,000 Rand per month by just belonging to your own medical aid and not be dependent on the government hospital system.
And we know, of course, that many households are also paying for extended family members, so there might be a medical aid for an elderly parent. Is there also a certain benefit?
Yes, the same applies to if you're paying for a medical aid where somebody else is the main member. On your tax return, you just need to click that tab where it asks you if you are paying for a medical aid where somebody else is the main member. You would then get the very same benefits on that, but just make sure that you obtain proof of the payments that you make for that medical aid. Normally, it's an affidavit, or it would be confirmation from the medical aid itself, saying that the funds are coming from you and not from somebody else. And what is most important is that if the person you are paying the medical aid for is also liable for filing a tax return with SARS, they are then not allowed to claim for the same benefit on their return. So you need to be careful, and you need to make sure that that person is not claiming that. Now, these days, because the returns are pre-populated with the information, it might well be that it already has their details on the tax return. So you just need to make 100% sure, please, that that person doesn't pay for that medical aid or claim for the medical aid, rather, on their tax return.
So, Andre, while we're talking about medical aid contributions, there's been one or two questions that links to medical expenses. So Kira asked, if medical expenses are paid out of the medical aid savings, can this be claimed for as well?
Yes, it can be claimed for as well, because that is still your money, and that would appear on your tax certificate, so it will definitely count as well. What we do, however, find is that in some instances, SARS is disallowing over-the-counter medicines, and they're only looking at medicines that has been claimed on a prescription or paid for on a prescription. So you might come across that where SARS is not allowing it, although it appears on your medical aid certificate and it's been paid out of your savings. It might well be because it was for over-the-counter medicines.
Okay. And I know we're going to explain to our audience about the auto assessment, but Han had a question, if the auto assessment has been done, can you still load your medical aid tax certificate if you had expenses that the medical aid did not cover?
Yes, you could. And that is done by opening up that assessment after SARS had auto-assessed you and saying that you want to still submit it manually with additional information that SARS does not have. Fortunately, this year, SARS allows the entire filing season for you to do that. Previously, they only allowed 40 days after the season had opened up, and then it was very difficult to rectify something like that. But now it is as if it is the first time you submit, and SARS did not auto-assess it. You would just log in and you would open up the existing return, and you would fill in that information in terms of the medical aid and submit that to SARS.
Then Elizabeth says, does this only count for medicine? What if you've paid to a specialist? So your medical aid maybe didn't cover the full specialist rate and you had to pay out of your own pocket.
Now, that definitely counts. And I think it is there where the big money comes in, because that's normally quite expensive. So yeah, it's any form of medical expenses or medical care really that you can take into account. Just remember, not all those expenses count immediately. It is only if those expenses exceeds a portion of your total taxable income that it comes into play. And the formula that SARS is applying is actually quite a complicated formula, but it effectively comes down to around about 8% of your total annual taxable income. So if those specialist expenses or medical expenses that you had to pay out of your own pocket exceeds 8% of your total taxable income, only then you would be able to claim a portion of that against the taxes that you've been paying. So regardless of who you paid, it could be a specialist, it could be a pharmacy, it is really just, it comes into play in terms of the total amount that you spent in a particular tax year.
Thanks, Andre. So I think the last point that I just want to focus on this particular slide is travel. And how do we actually claim? Do we need a logbook? And then we're going to move on to the explanation of what exactly is an auto assessment, and we'll be touching on some of those elements. So what can you share with us on the travel side?
Right. If you earn a fixed travel allowance on your salary every month, then 80% of that allowance is taxed every month, while 20% remains tax-free until you submit your return to SARS at the end of the tax year. Now, you might feel, or you might not be aware of the fact that you need to keep a logbook. So when you submit that final return without travel information or without your logbook, you would then be liable to pay income tax to SARS on that 20% that wasn't taxed. But if you keep a logbook of all business-related travel, and you also put on there where you went to and the reason for the trip, you would then be allowed to claim some of those taxes back that has been taxed on your monthly salary. So it's very important to keep that logbook and to keep that logbook in the format that SARS wants you to keep it in. If you do not keep a logbook, you will not be allowed to claim against that travel allowance, and you would be owing SARS a lot of money for just not keeping your logbook current. But what SARS had also tried to do is to convince employers to no longer pay employees a fixed monthly travel allowance, but to rather reimburse them for the actual business-related kilometers that are being traveled. So if you are one of those employees and you are being reimbursed for the travel that you actually use and not a fixed allowance, and you are being paid up to R4.64 per kilometer, then you would not be taxed on that at all. Obviously, it means that you won't be able to claim taxes back on your return as well, because it hasn't been taxed in the first instance. But what is very nice about that is it makes it a lot easier, and there's no additional logbooks to be kept or returns to be submitted with all sorts of information at the end of the tax year. It's just be very important that it is actual kilometers that you must be claiming from your employer at a rate not exceeding R4.64 per kilometer. If the rate exceeds R4.64 per kilometer, you would be taxed on that portion that it exceeds it by. And then you still need to keep a logbook if you want to claim those taxes back. If you don't want to claim those taxes back, then just forget about it. But if you want to claim it back, then keep a logbook, and you should be able to then claim the taxes back on depending on your actual costs incurred when you traveled for business purposes.
Andrea, and then on donations, how does this work?
One is allowed to donate up to 10% of your total taxable income to a worthy cause or to an institution that is actually registered as a non-profit company with SARS that is in a position to give you a Section 18 certificate as proof of such a donation. So they must be registered to what is called as a public benefit organization, PBO. So the number that appears on the certificate that you should be asking for must start with PBO, and then I think it is a 9-digit code that follows PBO. So that is the certificate that you need to obtain from an institution like that for you to qualify to donate up to 10% of your total taxable income to such an institution. The amount that you contribute is deducted from the balance of your taxable income, and only what remains then is once again taxed. So it's not deducted from the taxes that you pay, but your taxable income will be less, and therefore that portion of the contribution would not be subject to any form of income tax.
So I guess now the question that I want to ask you, many taxpayers might have received this SMS or notification you've been auto-assessed. So can you please just explain exactly what is the auto-assessment? And then we're going to address some of the questions that I'm seeing around, if I have received the auto-assessment, can I still load the medical tax certificate was one of them. And of course, just looking at, I think this one question was from Refillware. Do we file a return even when we have been auto-assessed? What does it mean to be auto-assessed? So if you could maybe just help with this.
Okay, sure. SARS have been very sneaky this tax season, where they've actually started to issue auto-assessments from the 1st of July, while they only opened up the filing season from the 8th of July. So that first week, you could do nothing about the fact that you've been auto-assessed, and you might even have received a refund in your bank account already. So they are really trying to make you not go and revisit that auto-assessment. And I'm not saying it's necessarily bad, but already in the chat, we had instances where there's a reason as to why SARS should not have auto-assessed you. And that is why we recommend to taxpayers to not just go and accept that. Now, an auto-assessment is SARS saying they've got all the information they already need in terms of you submitting your tax return, and they're not going to wait for you to submit it. They're going to accept that what they have is everything they need, and they will issue the assessment without your interference. Now, in some of those instances, probably half of them at least, SARS is correct, and they're making your life a little bit easier. But I wouldn't just trust that all the information is correct. So I would still recommend that you would log into SARS e-filing, go through that assessment, and make sure that the information they have is the information you have as well, that it is accurate and that it is complete. Because the process works as follows. Once the tax year ends in February, employers need to submit RP5 certificates to SARS where they state how much income you've earned during the year and how much taxes you've paid during the year. Now, if your employer made a mistake, then that information would be incorrect. Or if that information cannot be linked to your profile at SARS, then they might not have that on record. And the same applies to a medical aid certificate or a retirement annuity certificate or even interest that you've earned. It might also be that you now have investment property that you need to declare to SARS that they are unaware of, or you have a travel allowance that you want to claim travel against, and SARS didn't give you the opportunity to do that. So anything that you are aware of in terms of income or claims or expenses that you need to give to SARS that they might not have is the reason for you to go and revisit an auto-assessment. SARS only works with the basic information that they received from your employer, from your medical aid, from the retirement institution, and from the banks. But if there's anything else that you are aware of that you need to claim or need to tell SARS about, you need to open up that assessment, change all the information, and resubmit to SARS.
So I think really what you're saying is, don't necessarily just accept if you've already received that refund and say thank you very much. You need to, of course, just make sure that all of the information was taken into consideration. But what happens if I get a notification of a verification?
That effectively means that your tax return are being audited. And what you then need to do is submit to SARS via SARS e-filing with a link that they open up once it's been selected for verification, all the information pertaining to the details that is on your tax return. In other words, the RP5 certificate from your employer, your medical aid certificate, interest certificates, any type of information, and even if you claim against a logbook or claim against a travel allowance, a copy of that logbook. If you have investment property and you've claimed deductions or income, then that needs to be calculated and submit. Your calculations needs to be submitted. So any evidence that supports your claim to SARS or any evidence that support the income and the expenses that you've put on your tax return needs to be submitted to SARS. They then have up to 60 days to review that information. And if they find that it is all correct, they will issue a new letter stating that the verification has passed and that the return has been submitted and nothing else needs to be done. If, however, they find that you have incorrectly stated some of your income or expenditure, or they have other information that you have not declared to them, then they will state on the return that they are issuing an additional assessment based on information they have. You can then review that additional assessment. If you are happy with that, you might have made a mistake in error, or you might have not declared investment income or interest to SARS, and now you became aware of that. You might accept that, and that's the end of it. You will then have to pay in whatever is on that second assessment to be paid to SARS, or there might be additional refunds due to you depending on what they found. But you can just accept and leave it at that if you are happy with the second assessment. If you are not happy with that, you can then ask for a note, or you can then submit a notice of objection to SARS, where you then object against the assessment that they've raised. If that notice of objection is still not sufficiently addressed, then you can raise a complaint. And if the complaint is not sufficiently addressed, then you can take it to the tax ombudsman. So there are many means or many forms that you can go through in order for you to prove your claim to SARS. But you need to follow that specific process. You can't immediately just go to the ombudsman. They will chase you away and they will tell you to follow the procedures that SARS have put in place before you go to them. But that is really the process that has to be followed.
Yeah, and I guess this is also where the guidance of a specialist will come in. But what happens then if there's a tax administrative penalty? I think everybody feels a bit nervous when they see the word penalty. Can you maybe just highlight that for us?
Yeah, there are two types of penalties that SARS is levying. The one penalty is for the understatement of income taxes. So, and that normally happens when you had to pay provisional tax on your rental property, for instance, and you didn't do that. You will then be penalized on the amount of taxes that you did not pay in time. And then there's something called administrative penalties. Now, an admin penalty is levied for not complying to SARS rules and regulations and deadlines. So if you do not submit your return in time, SARS will penalize you for the late submission of that return. And that penalty is a recurring monthly penalty until the return is submitted. The amount is calculated based on your taxable income. So the lower your taxable income, the lower bracket of penalty you will receive. But the higher your taxable income, the higher your penalty will be. And it varies between 200 Rand up to 16,000 Rand per month for every year's return that remains outstanding until you submit it. If you do not pay those penalties to SARS, they will instruct your employer to deduct it from your salary. So it is something that you cannot ignore, and it's something that we definitely recommend you to rather resolve than to ignore. And the first step would be to bring those returns up to date, submit all those arrear returns so that the penalties don't keep on recurring every month. And then you can apply to SARS for the remittance of those penalties. They are not as keen on that than what they used to be in previous years. So they will not remit all those penalties, but we do find that they will remit most of those penalties once you comply. So the first step would be comply, and then the second step would be to submit a remittance of penalties to SARS to get them to reverse those penalties levied.
Thanks, Andre. So some of these elements on this particular slide we've covered already in terms of, the travel and the logbook and medical expenses. But I just want to touch quickly, of course, we're going to talk a bit in more detail about, tax when selling a property, if it's your primary or secondary residence. But do we also have to pay tax when we sell a vehicle?
No, a vehicle would typically be taxed as a capital or be seen as a capital asset, and therefore it might have been due to pay capital gains tax on that, but fortunately it is exempt from capital gains tax. Motor vehicle and small personal belongings like art or jewelry is exempt from capital gains tax. But things that are in fact included is property and share investments. Those are the two main things on which most individuals would be taxed in terms of capital gains. And how that would work is that, let's just focus on property first. One would have a primary residence, which is the property that you stay in, and you would have investment property, which would be something that you rent out to a tenant. Now, if you sell your primary residence, you would be exempt from capital gains tax on the first 2 million Rand profit that you make on such a sale. So it's not based on the selling price, but based on the profit you've made. So if you bought your property for 2 million Rand and you sold it for 4 million Rand, there would be only a 2 million Rand profit made. And that 2 million Rand would be exempt from capital gains tax. If you were to sell it for 5 million Rand, it means that you've made a 3 million Rand profit. The first 2 million Rand would be exempt, and the other million Rand would be subject to capital gains tax. If it is an investment property and not your primary residence, you would not get that first 2 million Rand exemption. So if you have a flat that you bought for 1 million Rand and you're selling it for 1.5 million Rand, that 500,000 Rand would be subject to capital gains tax. If you have shares that you invested a couple of years ago and you paid 10,000 Rand for it, and now it's worth 100,000 Rand, it means that you've made 90,000 Rand profit. that 90,000 Rand is subject to capital gains. But then how the calculation works is that the first or only 40% of that capital gain that you've made is subject to capital gains tax. So in terms of let's just use your primary residence on which you made 3 million Rand profit. The first 2 million Rand is exempt. The million Rand that remains, 40% of that is subject to capital gains tax. So only 400,000 Rand of the profit that you've made would be subject to capital gains taxes. And that 400,000 Rand is added to the rest of your taxable income to determine at what tax bracket you would be taxed at. If that pushes you into the highest tax bracket of 45%, it means that on the million Rand profit you've made, 40% of the million Rand is subject to income tax, and 45% is the tax rate that you would be paying on that profit. And what it effectively equates to is that 40% of 45% equals 18%. And what it means is that you could be safe if you say that 18% of my profit is the maximum I would be paying in income tax on such profit that I've realized. So obviously it depends on your effective tax rate on the sliding scale on your income for that particular tax year. So one cannot predict that upfront because it's a combination of your total taxable income. But the maximum would always be 40% of the profit at a maximum of 45% tax. In other words, 18%.
Quite large percentages, Andre. So yeah, we're definitely also looking at the different tax rates. And I think very often where we feel this is when we maybe receive a bonus or there's a salary increase pushing us into the higher tax bracket. And we often get the response, but I got an increase, but I actually can't even see the difference on my net income. And that, of course, could be because the person was pushed into a higher tax bracket.
Correct, yes. And that is what is referred to as creeping, when you just creep up to the next tax bracket. And that is the reason why SARS is trying to kind of counter that by increasing the amount of money that you need to earn before you start to pay income tax, or in other words, the tax rebate. So you will see that every year the tax rebate goes up slightly because of the income, your salary increases that might push you into a different tax bracket.
Andre, and then of course we spoke about, when selling a property, whether it's your primary, your secondary, and then the capital gains tax. But how about when we finance a property? We know that there are certain fees applicable. There's the attorney transfer fees, there's the registration fees, there's the bank initiation fees, and very often consumers confuse the attorney fees with the transfer duty portion. So can you just briefly explain to us transfer duty and when that kicks in?
Transfer duty is just another form of taxes that we are needing to pay in South Africa, or worldwide actually. And that is calculated based on the value of the property that you are buying. And the buyer of the property is responsible for paying that transfer duty to SARS. The attorneys handle that payment and they pay it across to SARS. And that is often why people think that your attorney fees or your transfer fees in itself is so expensive. While in reality, a big portion of that is actually a form of taxes that is called transfer duty that is paid across to SARS. Now, that transfer duty varies depending on the value of the property, while the first 1.1 million Rand is exempt from transfer duties. But then it goes up depending on the value, up to about 13% if you buy a property in excess of 12 million Rand. So once again, SARS is saying the more expensive the property, the more money you must have to own such a property. And therefore, we will be taxing you at a much higher rate depending on the value of the property. And it could be as low as 0 if it's below 1 million Rand or 1.1 million Rand, up to 13% if it exceeds 12 million Rand. But if you look at the middle band there, if you look at property between 1.5 to say 3 million Rand, it's going to be roughly 8 to 10% of the value of the property that you need to make provision for when you buy your property. Often when you are not a first-time property buyer, you need to pay that upfront in cash. But the banks sometimes finance that on behalf of first-time property owners, and that is what they often refer to as a bond that covers 108% of the value of the property. It's 100% of the property plus 8% to cover these type of costs.
Definitely. And I want to encourage our audience, if you are thinking about purchasing a property, reach out, speak to one of the financial coaches. Let's do an affordability calculation and give you an indication of the transfer duty, the transfer fee, registration fee, initiation fees, and how you could potentially prepare for that. Now, Andrea, I know we need to start wrapping up, but there's still one or two important points I would like to cover. We haven't spoken about investment and that tax-free investment. I've got a little savings account. Can I use that as a tax-free saving account?
No, a tax-free saving account must specifically be packaged as such from the bank or from the institution at which you invest into a tax-free savings plan. A tax-free savings plan is something that government introduced a couple of years ago, where they say that if you invest into such a plan, any proceeds from such investment would be tax-free for the rest of your life. So it would be something that we would recommend taxpayers to invest in, but not to be confused with a tax saving that you get every month if you invest into a retirement annuity. The difference there is that if you invest into a tax-free savings plan, you do not get the tax benefit as you make the investment. It doesn't reduce your taxable income in that particular tax year or the taxes that you pay in that tax year. It is calculated on the proceeds from such an investment. So if you put in money into a savings account that is qualified as a tax-free savings plan at a bank, the interest thereon would never be taxed. If you put it into a share investment, then the dividends or the capital growth on such an investment would not be taxed for the rest of your life. But there is a couple of things that you've got to take into account. Firstly, you cannot invest more than 36,000 Rand a year into such an investment. And you cannot invest more than 500,000 Rand in your lifetime into a tax-free savings plan. One would think that SARS ups that during the years, but they haven't. It's been like that for years now, and hopefully in future they might up it, but it's not something that's been done so far. And if you invest in excess of those limitations, you would be taxed heavily on the amount that you invest. So you might think that you're going to invest 5,000 Rand a month, in other words, 60,000 Rand a year. The amount that exceeds 36,000 Rand would be taxed at 40% in that year that you've made such an investment. So please do not exceed those limitations. It's going to cost you dearly.
So, Andre, when things go wrong, what happens? You know, how can SARS actually recoup the funds? I think there was also a question, where it says that SARS said that I've defaulted on my return. That could simply mean, you haven't submitted, or there are penalties, or they're saying that you owe them money. How can they actually get this funds back? And then we're going to quickly touch on how to do a simple tax return and when you need help.
Okay. SARS can deduct money out of your bank account when they've sent you sufficient notification of an amount that is due to them. Now, there's been many court cases before, some won, some lost, and that's why up to this point in time, it's really been defined in that if they've sent you notifications and they can prove to you that they've sent notifications to you various times before, and that the assessment that they've issued is correct and due to them, and you still keep on ignoring that, they will take the money out of your bank account. But what they've also started to do now is to institute a garnishee order against your salary. And what it means is that they would notify your employer to withhold a certain amount of money every month and pay it across to SARS for taxes and for penalties that is due to them. So you cannot keep on ignoring SARS anymore. You need to comply. And that's also why I mentioned before, if you haven't submitted your returns, submit those to SARS so that you stop paying penalties, then ask SARS to remit those penalties. Otherwise, there is a way in which SARS will recover it, either from your bank account or from your employer as a deduction from your salary.
So we should not take on the ostrich mentality, bury our heads in the sand and ignore those communications. I think we have explained what is the auto assessment, when you receive it, how you should respond, whether the data is correct, and if you do not agree, what you can do. So can you maybe just explain to us how to submit a simple tax return?
You need to be registered on SARS e-filing, which is a relatively simple registration where you just put in all your details, including your tax number. You submit your ID, your copy of your ID, copy of a bank account, and copy of your proof of residence to SARS. They will then open up the profile. You click on that particular year that you need to submit, and you go through a form that's a type of a wizard form where that SARS asks you various questions where you answer yes or no to. And depending on those answers, it'll open up certain sections of the tax return. On that sections, you would then enter information that doesn't appear there already. But you might find that your IRP5 certificate, your medical aid certificate, interest earnings, And yeah, I think that's basically it. And your retirement annuity contributions will already be there. But if there's anything else that you need to declare to SARS, maybe with an investment property that you have, or capital gains that you had that you need to declare, or medical expenses that SARS is not aware of, anything else that you do believe that you need to submit on the return, you are then allowed to enter that on that return. If you are happy with all the information, you can save the return and you can hit the calculate button, and that'll then tell you how much taxes you are due to SARS or how much your refund might be from SARS. If you are happy with that, you can then submit the return. Immediately upon submission, you would get an assessment from SARS that will then confirm the amount that is due to them or due to you from them. If it's not selected for verification, you will get that refund paid out very quickly, normally within 5 days. But if it is selected for verification, you will receive a letter stating that. You might even receive an SMS to that nature as well. And SARS will open up a link on e-filing where you would then submit the supporting evidence. Once somebody at the SARS office had worked through those evidence and they are happy with that, they will then tell you that the verification is complete and you don't have to worry about anything until next year. If, however, they are not happy with the information, they will issue an additional letter stating what the problem is. They will allow you to address that. But if they find that there's nothing else to be done to it and what their findings is full and final and accurate, they will issue a final assessment. And then based on that assessment, you would either get a smaller refund or you might owe SARS some money. And if you're happy with that, then that is the end of it. If you're not happy with that, you can submit a notice of appeal or notice of objection rather, and a complaint, as I mentioned before, and ultimately go to the Ombudsman if it is not satisfactorily resolved.
Thanks, Andre. So I know I personally feel a lot better if I get the guidance and support from a tax specialist, and maybe many of our participants today feel the same. So I just want to mention to our audience members, you can vote now. Do you need assistance with your tax return? And like Andre mentioned, he is from an independent company, Xperity. He's been our partner for many, many years. So you can reach out to the Ask Nelson program if you need help with your tax submission. I just want to mention that this is a fee for service. Andre has very kindly negotiated a 20% discount on his fee. So Andre, I know we need to hard stop, but can you maybe just quickly explain what the consumer could expect if they do come through to your team for assistance, and what would the fee look like?
Yeah, if you have any specific queries, we would obviously address those queries for you free of charge. But if you need assistance with the submission of your return, we charge a fee of 800 Rand for such a submission, but you would qualify for a 20% discount that reduces the fee to 640 Rand. That'll take care of probably 90% of most taxpayers' returns. So if you have most typical income and expenditure on that return, then that would be your fee. If, however, there are additional things like a travel allowance or rental income or capital gains, there's some additional fees because it takes a little bit longer to complete that return. And then we take care of that submission up to the point where it's all finalized and your money is in your bank account. So we would take care of the queries from SARS. We would make sure that the information that you submit us is accurate. Obviously, we're not going to do your logbook for you, but if you send us a logbook that doesn't qualify, we would guide you along the way to make sure that when it goes to SARS, it is in fact accurate. And what we would also be doing, based on what we find your income and expenses are made up of, we would tell you what you would qualify for. You might not know that you're going to qualify for a certain deduction. So, for instance, if you earn commission that is in excess of 50% of your total income, then you can deduct certain expenses against that commission. It might be something that you are not aware of, but we as tax practitioners know that. So we go through your profile, we go through your earnings, and we then guide you along the type of things that you are allowed to claim. Once you're happy with the way in which we've calculated that, we then submit it to SARS. And as I said, if it is selected for audit or verification, we submit that information to them as well, and we make sure that it is in the correct format, up to the point where your return and the submission and the assessment from SARS is 100% complete for that year.
Andre, thank you so much. Do you maybe have time for one last question? Because this is one of the questions we did not address in particular, and it is around working from home. You know, I know last year this was top of mind for many people, but it kind of fizzled out. But working from home, can I claim my office space, and is it worth claiming?
First answer is yes, you can claim it. Second answer, we're finding that it's not worth it anymore. And the reason for it is that SARS is making it extremely difficult now for you to actually qualify or to prove your claim to SARS. But if you do believe that you are making use of a home office and you are making use of it exclusively as a home office, then yes, go ahead and submit that claim. Why they're making it so difficult is they're asking these days for, well, what they've asked for before as already is proof from your employer that they expect you to work from home. So you need to obtain a letter from your employer stating that you are allowed to work from home. You need to use that area exclusively as a home office. And to prove that to SARS, they're asking for photographs. They're asking even for a video clip where you basically turn around in that entire area where SARS can see what the area looks like. And they are also these days asking for plans as well. They want proof of how much rent you're paying, all sorts of things that they want proof of before they actually acknowledge such a claim. But that's what I'm saying. If it is really a valid claim and you have really made an area available for home office that has cost you money and you do believe that you should make use of that benefit, you are allowed to do that. But it is very difficult to now convince SARS that they should allow it.
Thank you so much, and I hope that answers the question. That concludes our session this afternoon. Just as a reminder, if you need guidance, there's a couple of ways for you to reach out. You can simply use your Ask Nelson number. You can scan the QR code, which was displayed. And of course, I would love your feedback in terms of the session. Please rate the session by scanning the QR code. Andre, thank you so much for sharing your expertise and for going through all the motions and answering the questions. If we didn't particularly get through to your question, please reach out to the program, speak to us, and we will then, of course, refer you through to Andre and his team. I hope everybody stays warm, stay healthy, stay blessed until we see each other again. Take care, everybody.
Bye.